The FBM KLCI dropped 1.26% to its lowest point since February, following the news that the US Index provider MSCI had reduced its weightage on Malaysian equities. The index shed 20.72 points to close at 1628.26, marking it as one of the worst performers today in the region in relative terms. Barely any of the heavyweights was spared in the carnage, with CIMB Group Holdings Berhad, Malayan Banking Berhad, Sime Darby Berhad, Petchem Berhad and UMW Holdings Berhad taking direct hits to the face. However, in contrast, Public Bank Berhad, BAT Berhad and IHH Healthcare Berhad had their weightages increased in MSCI's portfolio. While MSCI's rebalancing act had a big part to play in the KLCI going red, lingering concerns of state fund scandals and weak GDP numbers also contributed. Malaysia's first quarter GDP grew at an expected slower rate of 4.2% compared with 5.7% a year ago. According to the Department of Statistics, all sectors in production were showing positive growth, barring agriculture. The primary catalyst driving the engine remained manufacturing and construction. Local consumption for both private and government helped to balance out sluggish external demand. In response to the numbers, Bank Negara said that the tempered growth reflected external shocks to the economy and continued volatility in the international finance and commodity markets. Pushing ahead, Malaysia's economy is now expected to waver from the 4 to 4.5% range. Newly minted Bank Negara Governor Dato' Muhammad Ibrahim came out to say that 1MDB will be using the $1.83 billion it's bringing back to restructure its debt. As such, 1MDB will be given time to repatriate the funds, and BNM has decided against a deadline for the repatriation to be complete. Muhammad said that the restructuring debt tends to take a long time as it involves a lot of different parties and procedures. Earlier, BNM had come down hard on 1MDB for failing to comply with directions under the Financial Services Act, giving them a May 30th deadline to pay the compound. Once settled, it would close the book on BNM's investigation on the state fund. 1MDB said that it would pay by the deadline, and today Muhammad announced that the investigation is now closed. In a move that can be described as managing expectations, Digi.com Berhad CEO Alban Murty says that service revenue and earnings before EBITDA margin for the company will be flat for FY16 as competition remains heated. Alban says that the telco's focus will continue to be on service revenue rather than market share, even as its subscriber base for the first quarter grew to 12.34 million, outstripping rival Maxis' base of 10.89 million. He refutes that Digi is sacrificing profit for subscriber numbers, saying, "We have always emphasized on growing service revenue. We are glad for the subscriber numbers, but it's just a seasonal factor that drove it." Murty says he also welcomes competition, new and old, the new being Packet One Network's upcoming Weebie launch, but emphasizes that Digi's core strategies never waver. Genting S'pore PLC saw its net profit for the first quarter of 2016 plunge 83% compared to a year earlier. Genting S'pore's first quarter net profit was a mere 10.84 million Singapore dollars compared to the 62.66 million Singapore dollars in 2015. The culprit? Operating expenses that spiked an eye-watering 723% to 53.98 million Singapore dollars compared to the mere 6.56 million Singapore dollars a year before. Resorts World Sentosa continued to be the big money spinner as Genting S'pore said it saw improvements in regional gaming business volume for VIP and premium mass. Universal Studios Singapore also attracted 1.6 million to its gates, its best first quarter since opening. Genting S'pore said it will continue to be cautious on its VIP gaming business while steadily growing the RWS brand.